Hey, what's up folks? Jesse Cohen here again for Investing.com, and in today's video I'll highlight the 5 best high growth stocks which need to be on your radar in February 2021. All 5 are expected to report explosive earnings and revenue growth thanks to surging demand for their innovative products and services. Each is well worth considering ahead of their upcoming earnings reports in the days and weeks ahead. So there's a lot to stay tuned for. Before we get started, however, don't forget to hit the like button and share this video with your friends and family. And if you really want to help us out and support Investing.com, you can subscribe to our YouTube channel. That way you stay up to date with all the latest videos which come out. So let's jump right into it. Our first stock to watch in February is Pinterest. Pinterest shares widely considered one of the best performers in 2020, having jumped by around 250%, have picked up right where they left off last year, with the stock rising around 5% in 2021. The social media company next reports its financial results on Thursday, February 4th, after the closing bell, and we're expecting another blockbuster report from Pinterest. EPS estimates call for 33 cents for the fourth quarter, improving significantly from EPS of just 12 cents in the year-ago period. Revenue, meanwhile, is expected to jump 61% year over year, driven by strong advertising demand and high user engagement levels amid the holiday shopping season, of course. In addition to the top and bottom line numbers, we'll pay close attention to 2 key metrics for the social media company, and those, of course, are global monthly active users and average revenue per user. Global MAUs jumped by 37% in the last quarter, while ARPU reached $3.85 within the US. That was up 31% when compared to the same period a year earlier. So heading into earnings, we like Pinterest. We expect it to report higher a earnings beat as well as a revenue beat, as it will likely continue to benefit from the increasing budget allocations from advertisers seeking to avoid the more content or the more hateful and often controversial content seen on other social media networks such as Facebook and Twitter. So Pinterest will likely continue to reap those benefits, and that's why we like Pinterest heading into February. The other name we like from the social media space in February 2021 is Snap. Snap, of course, the owner of Snapchat, the messaging service, which has seen a resurgence in user growth as well as robust demand from advertisers. Snap stock ended 2020 with a gain of 250%. The stock, just like Pinterest, has picked up right where it left off, jumping around 7% so far in the new year. Again, similar to Pinterest, Snap reports its financial results on Thursday after the closing bell, Thursday, February 4th. Revenue is forecast to jump 51% year over year thanks to accelerated ad spending made on its platform. Expectations call for a loss per share of 7 cents. That, of course, would be a significant improvement from a loss per share of 17 cents in the year-ago period. The messaging app, of course, like I said, has recently enjoyed a resurgence in user growth, with daily active users rising 18% in the last quarter to reach an all-time high of 249 million. So we'll be keen to hear further details from Snapchat regarding user additions over the fourth quarter. Just like Pinterest, we'll also pay close attention to overall revenue per user growth, which rose 28% to an all-time high of $2.73 in Q3. So Snap, of course, is showing signs that the social media company has further improved its ability to monetize its user base. Similar to the headwinds that are pushing Pinterest higher, Snap, of course, is seeing increasing budget spending from those advertisers, which are seeking to avoid Facebook and Twitter. So Pinterest and Snapchat both fall under that umbrella, and both are expected to push higher following their earnings reports, which come out during the first week of February. On to our third name. This one hails from the cybersecurity sector. I'm talking about Fortinet. Fortinet, of course, has been one of the top performers in the growing cybersecurity space in recent months. Shares are up around 40% since the start of November. The cloud-based information security firm has benefited from increasing demand for its products and services as the COVID-19 pandemic and the work-from-home environment has sped up enterprise digitalization trends, similar to the two names mentioned before. Fortinet also reports earnings on February 4th, Thursday after the closing bell. It has either beaten or matched Wall Street estimates for 11 consecutive quarters dating back to Q1 2018. So the company has a proven track record of beating earnings and revenue estimates. Expectations call for 96 cents per share earnings, which would indicate a year-over-year growth rate of 26%. Revenue is forecast to rise around 20% from the year-ago period, as of course the shift to the work-from-home environment created soaring demand for its security solutions. So we're looking at double-digit EPS growth, double-digit revenue growth. It's widely considered one of the leading names in its sector. So of course, all the recipes needed for a high growth stock to continue its march higher. If you look at the chart, Fortinet shares are trading near their highest levels on record. Despite lofty valuations, we expect the name to continue to push higher in the months ahead. On to our fourth name to watch in February. This name reports its results on Thursday, February 11th. I'm talking about Cloudflare, which we highlighted before in previous videos. The company, like the other names mentioned before, was one of the big winners of 2020, with shares gaining more than 300%. The tech company benefited from mounting demand for its cloud-based networking and cybersecurity services, resulting of course from the surge in internet traffic during the stay-at-home measures we saw throughout most of last year. Cloudflare's stock looks likely to continue its remarkable run higher in 2021, thanks to surging demand for its web security, content delivery, and enterprise networking services and solutions. The current operating environment has made Cloudflare one of the best names to own. And despite the monstrous run-up over the last 12 months, the name looks like it still wants to move higher. The network security firm said it had over 3.2 million customers as of the end of the last quarter. Even more impressive, large customers that spend at least $100,000 annually jumped to 736. So the users the users keep coming back to Cloudflare's services. Its emerging status as one of the leading names in its field, of course, make it a good bet going forward, despite the monstrous gains we've already seen. So Cloudflare, keep an eye on this one. Like I said, it reports earnings February 11th, Thursday after the closing bell. And our final name also hails from the cybersecurity and internet content delivery space. And this one, we're talking about CrowdStrike. This behemoth of a stock set the market on fire last year, rising 325% in 2020. So it's in good company along with Cloudflare. Its emerging status as one of the best names to own in the cybersecurity space. CrowdStrike looks set to continue like it wants to be a big winner despite stretched valuations, considering the strong demand it has seen for its cloud-based cybersecurity tools. The fast-growing tech company, it already accounts about half of the Fortune 100 companies as customers. It had about 8,000 customers as of the end of its most recent quarter, up 85% year over year. So we're talking about nearly triple-digit user additions on a quarter-by-quarter basis. So the cybersecurity company is likely to see even greater demand in the months ahead, as it looks set to be one of the main beneficiaries of the increased spending from corporations amid the fallout of the massive hack that originated at SolarWinds late last year. So buy CrowdStrike if you want to position yourself in the company for another strong earnings reports. It reports, of course, March 2nd, early in March, but February looks like a good time to buy before earnings if you want to position yourself in one of the best names to own in the cybersecurity space. So I hope you enjoyed this video. We covered Pinterest, we covered Snapchat, we covered Fortinet, CrowdStrike, and Cloudflare, the 5 most biggest companies, of course, of the high growth stocks, which need to be on your radar heading into February 2021. 2 stocks from the social media space, 3 stocks from the cybersecurity space. Those 2 themes look set to be the big winners in 2021. So if you enjoyed this video, share it along with your friends and family so that they're up to date with these developments as well. Thanks everybody, have a good one. May the trading gods be with you.